G'day guys, welcome to the channel. My name's Tim, and on today's episode we're taking another look, another look at Bitcoin, and specifically we're looking at its relationship with the 50-day moving average and how far overextended it is compared to what it's done in the past. And we're basically looking for clues. Now, I don't really have a conclusion to this video, so it's really just observing the data. And I open this up to everyone watching the video to see if you can see any particular patterns. And if so, please comment below, because I'm trying to see some clues and some patterns here, but I'm not really sure what it's doing, to be blunt. Now, the first thing I will mention, though, is that this looks extremely strong. You know, we've had 1, 2, 3, 4, 5, 6, 7, 8, although we are holding on for that 8th day green. And looking back over its history, we haven't had too many points where we've had that many days in a row that are green. Like you can see even on the way up here, like maybe at this point here, we had probably the similar number of days green, and then we end up having a couple of days red going sideways, and then some more green, some more red. So it's very rare that we just have a big chunk of green days. So that, to me, does show a lot of strength. And if we were to pull back a little bit and then have another wave, then typically, at least with Elliott wave theory, the wave 1, 2, 3, 4, 5, this middle wave is usually the largest. So if that does happen, then we'll probably have a larger wave. So just anticipate if we do have a pullback and then start to show some momentum again with lots more volume, then this next wave is probably going to be the largest of the waves. So that is something to look out for. But I will say also, just the other side of the coin, in every other bull run, whenever we have been at this point where we've crashed through the 50-day moving average like we have here, and then we poke above it, in every other bull run that Bitcoin has done, it's always gone back below it again on every single occasion. So very quickly, you can see it here every single time. There, and now we're halfway, or we're up, and we don't know what will happen next. But so there's two particular scenarios. Now, normally I would think, it's a given that we'll come straight back down. But because this is so strong, just so many green days in a row, it does raise some doubts that we could go off and have a larger third wave here. So wave 2, which is the pullback, and then a larger third wave. So that could happen as well. But anyway, for this video, what I'd like to look at closely, though, is the percentage that we are above the 50-day moving average. Now, we've had a bit of a pullback in the last hour or so. So we're just below, at the time of making this video, we're below 40K, but we have wicked to about this 40K mark, which is still around the same height that we've been there before. But the difference between here and here is that this time itself has caught up, and we are now above the 50-day moving average. So I think it's fascinating that despite the price going up and down, all these squiggly lines, the 50-day moving average is this nice smooth mountain. It goes up, curves around, and goes down again. It's almost like that's what the market is doing. The market is moving slower than you think it is. We get so caught up in what happens that hour or that day, the price going up and down, and it's so confusing. It's a roller coaster ride. But if you take a step back, the market goes up, it slowly turns around and goes back down again. And to me, it gives me some peace, because a lot of people talk about all the manipulation that goes on with the market, and the whales that are stealing our coins and so forth. But when you look at this, it's just so simple. Now, what we don't know is whether, you can see it, there's a bit of a lip here. We don't know whether it's going to start curling it up again. So anything can happen. But we're currently actually about only about 14% above it, but we have been up to 18. So we'll just leave it up there about 18%. Now let's have a look through history, just out of curiosity, to see how far we've overextended above the 50-day moving average before. And you can see when we reached the absolute peak around the 14th of April, we were overextended by about the same amount, that's sort of 17, 18%, which is interesting. We dropped below and then we popped up about close to 5%. But on the way up on the bull run, you can see that we were overextended by about 38% here, 81%. And by the way, this is a way to tell if we're likely to come back and have a pullback. So say you miss one of these runs, and a lot of people FOMO in when they see a lot of green candles. But all you have to do is measure the distance from the moving average to where the price is, and it gives you an idea to see how far overextended we are. So at this point, for instance, let's say we got this far into the bull run, you can see the moving average is down there, and the price is up here, which is 81% above it. So let's see what happened next. All of a sudden, we have a bunch of red candles. We have some green. We kind of go sideways a bit, and then we go right down, and we end up touching the moving average. So, and then we bounce off and go up again. So you can actually, when you get to this point and you think, oh, I've missed the boat, rather than FOMOing in, just measure how far away we are from the moving average. And you can usually, by having a bit of patience and just holding a nerve, you can see that we always come back to it. And it happened to get up here. I mean, there are times though when the market does get overexcited, and this point here, you can see that we're 38% above the moving average. And by the way, if you look at the price there, it's about 19.5K, which was the previous cycle high. So, this is the point where we got up there, got to the same height as we had in the past, and we got rejected. So the price comes down. It's gone back up again. We actually got slightly above it. You can see there, just above 19,800, and we come back down here. Now, we didn't actually touch the moving average, but I think what happened there is the market probably got really excited that that we've reached the previous cycle high, and straight away everything got very bullish, and we shot right up, and then we started overextending by these crazy amounts. Now, even though these amounts here on this bull run we got up to sort of 81%, that was probably the most overextended that we got, which came just after we broke the cycle high, this next run, the previous cycle high, that is. So just remember that number, 81%. Let's have a look at 2017 and just see what kind of percentages we overextended by. And you can see how it's a very different bull run in some respects. So you can see here, we overextended by the 50-day moving average by 148%. So this really is a warning sign that we are probably going to crash. It's almost like elastic. The further you extend it, the more pressure it's going to pull it back to the moving average. And in this case, it pulled it back so hard that it ended up crashing through. So if I just cover up the screen again, you can imagine at this point, that's where the moving average is there. That's where the price is. We're 148%. Now, you just know that the markets don't keep going up in a straight line like that. They always come back to the average. The market itself, the natural demand and supply of the market will not allow it to just keep going up and up and up. It's going to have a pullback to the moving average. I mean, the moving average mathematically is derived from the price. So, they are inherently linked. So you can see here what happened next. We go up and down a bit. You can imagine not knowing what's happening here. We're going sideways. What's going on? Oh, going green again. By this stage, we were 92%. So the moving average had crept up, and that's because time itself had progressed. So the price essentially stayed the same, but time moved on, and that's why the moving average caught up with it. So we're 92%. So if we just keep going sideways, eventually the moving average will catch up to the price and will basically equalize, and the market will be happy. But instead, in this case, we ended up crashing down. We bounced off the 50-day perfectly, then bounced up again, and we're about 25% before crashing through. Okay, so those were some of the percentages. Now, let's have a look at this point here. This is really important because this is similar to where we are at the moment. You know, we crashed through the 50-day moving average, and now we're finally breaking above it for the first time in the cycle. Now, last time we did that in 2017, we only got about 13% above it. This time, we got about 18%. So we're doing better at this same point than we were last time. But it depends if that's the point we're up to or whether we're closer to this point. And you can see that back in 2017, we got above it, then we went below it again, and we go above it. And this time, we actually got about 19 to 20% above the moving average before going below it again. And then this time, we got about 24%, and then we crashed down. So, yeah, we're in a similar ballpark to where we've been in the past. Now, it's quite possible this time that we're actually off. We're going to go off and away. We'll have to see what plays out in the coming days, coming week or two. Now, if we are about to go off and away, maybe we should be looking at what happens at the bottom of a cycle, because if we've been going sideways for about over 3 months, and if we're now starting to creep out of that sideways move and go up again, let's see how far we've overextended at those points. So this is the bottom back in 2019, early 2019. So you can see we finally got above the moving average here. We got about 14%, and then we went sideways. And then we had a big green day here. That was pretty amazing, actually. And we ended up being 32%, and we went sideways. You can see as you go sideways, the moving average catches up, and then we got excited again, and then we shoot right up to about 55%. So you can see here a bit of a pattern when we go a certain percentage up, we go sideways, the moving average catches up, but we don't touch it, and then we get excited and shoot off to a higher percentage. And we went sideways again, never touched it, and then shot up again. So then we got up to 60%. So this is the peak in 2019. So we're 60% above it, and then we crash, and then the first time we go above it again, we got about 13% before going below it again. And then the second time, we got about 18%. So we're seeing some similar examples at this point in the market. So Bitcoin, about 18% above, and then we've crashed through it again. So you can see here 22. Then we had the COVID crash, and then working our way out of the COVID crash, we got 36% above it. Now, instead of crashing down, we went sideways and just let time catch up. So that's what I call a time-based correction, where the price stays the same, but time catches up to the price, and then the moving average and the price equalize. So that's an equalization there. And typically after that, we either go down or go up. And in this case, we go up, which is good. Spend a bit of time above it. We're about close to 19, 20% above, and then we go down. And then this is when the bull run really started going off and away. So again, there's no real conclusion for this video. It's just some observations. And it's really, we have no idea what will happen next. Compared to the previous other bull runs, I'd say we go down. But because this is so green, so strong, it does give me some doubts that we may go up again. So we really have to see what happens next. And the other factor I'd like to mention is just the markets in general and the current economic climate. We have to look at factors outside of crypto. So crypto doesn't just exist in its own bubble. So if the other markets, and right now, as I'm making this video, the US markets have just opened. So we can check to see what's happening there, but nothing outrageous has happened in the last 20 minutes since the markets have opened. So we'll just have to pay attention over the next couple of days and see what happens with this. But it is fairly normal to be overextended by these amounts. We've been overextended by way more in the past, and we've crashed down, and on other occasions we've moved our way up and done another bull run. So there's a couple different scenarios that could play out. Anyway, that's it for this video. I hope you enjoyed that. If you have any questions or any ideas for videos, yeah, please comment below. I'd love to hear those ideas. I've had a few people suggest some ideas, including looking at the lunar cycle and solar cycle. I'm a big fan of cycles in general. So if you've got any ideas, yeah, please comment below. But until next time, I'm Tim, and cheers.